Hello once again, everybody. This is Rich with High Percent Trading. Thanks for joining us and watching this short video. We're going to show how to trade the institutional algorithms in the direction of the overall trend. This is a very efficient way of trading. We're going to start with crude oil. We also did have an oil inventory report today in crude, and I'll show that in a little bit of time here on this video. But these bands that are showing right in the cyan, this is earmarking when the institutional algorithms are kicking in for each respective market that you may be following. In this case, it's crude oil. And also, I'm using an indicator here called the octopus that's actually triggering with arrows the entries, at least the conservative entries, where those would be. And the beauty of this is for manual traders, you can act on these if you wish to automatically trade this, basically a hands-off, of course, while you're monitoring it. And we never recommend anybody try to auto trade anything and walk away from the screen. But these will automatically enter the trades and manage them on your stops, profit targets, and trail stops according to whatever ATM strategy that you may choose and use. But let's talk about the trade setups. We're going to talk about, here's the pit open right here. So shortly right at the pit open, we did have an institutional algorithm band, and you can see that our trend was up. That's denoted by this blue mid band. And of course, the trade entry was signaled by the arrow here. Now, the best way to trade, and a lot of you know this already, is if you can trade in multiples of 2 contracts. You try to come in and get a scalp on the first one and try to hold on to a runner to get a big run if you can. So this was the initial trade here. You're having a scalp anywhere along the line plus holding on the runner, and you can see that runner would have not got taken out. There were additional entries that occurred later. This was another institutional algorithm, and you can see long trade entries here and here, 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 and here as well. And then right at the crude oil inventory report, the report came out right here. Now, because the markets move so fast, at least at the inception, it's difficult to trade, and so therefore, even though this was denoted by an entry, it's not recommended that you trade in that first 30 seconds to minute after the report, but certainly getting in earlier on this and then riding the market up would have produced some very nice trade results. And as often is the case, the big money, the large hedgers, the big institutional traders, they know what these reports are in advance, and that was reflected again in the overall movement of this market. It was finding good support as the institutional algorithms were buying, and then the report came out, the market spiked, and then as you got a little later on, notice it came down here into the algorithm band again, triggering another trade. By this time, the market had slowed down. Some traders were able to get this trade here because we had close to an entire minute elapsing, and some of the chaos of the initial report has subsided. But again, you can see all of these entries, very nice entries here as the market moved substantially higher off of this. And of course, you could have been holding the runners from further on back. Now, one of the nice things of trading the institutional algorithm setups with the trend and with this type of filtering system is it will keep you out of a lot of bad trades as well. You can see that the trend changed to down here. It was pretty much kind of a head fake at the beginning because all the market did is take some support out, but the trend did change to down as denoted by this mid band. But notice as the market moved up, there was no short trade signal because we did not break below the band. So this is a good indication of it keeping you out of bad situations. You can see as it moved higher, we started making new session highs again. The institutional algorithms kicked in here again, and you had several nice long trade entries in here, resulting in a nice profit. This entry here was the first entry that did not work. This would have been a full stop out loss for about 6 or 7 ticks as it came up, entered and then out. And then again, as we moved further on, you did have a couple of nice other trade entries here that resulted in some nice scalps and some nice profits. The market then broke to the downside. And again, as I was indicating, we had one of these roller coaster rallies back up that kind of went coast to coast. You had several institutional algorithms kicking in here, but based on the filtering, it's not allowing you to get short, so basically kept you out of the trade. And of course, the downside to that is because of the rapid movement here right towards the end, you did not participate on the long side either. But as you get down into the pit close rather, it's a little bit iffy trading crude oil, so not a lot of traders really are trading at this time anyway. You can see as the market continued to move, we're doing this in real time. Market came all the way down to what's called the phantom area. There was an institutional algorithm band here. It did trigger a long trade to the upside here, so again, good participation. So that's the crude oil market. As you can see, it's still moving up as we're talking, but out of all the trade setups I think that we covered here, the good combination of trading institutional algorithm bands with the overall trend was very, very profitable. Let's take a look at another couple of other markets here if we can from today. Now here's the Russell contract from today as well. This is trading off the pit open. Pit open, of course, is 6:30 a.m. Pacific. That's 9:30 Eastern. So at 6:30, we did have an algorithm band here based on the institution's participation. Our trend was down, as denoted by this color of this midband. If you recall the color of the midband, if it's this magenta color or red, we're in a downtrend. So we're in a downtrend, and you can see we had several nice short trade entries here that resulted in very nice profits as this market moved down. And for a lot of traders trading this method, they basically were done meeting their goals on their short trades. So again, nice movement to the downside, a series of nice short trades, and pretty much meeting goals in the first half hour. Now continuing on, you'll see that very close to right around 7 a.m. Pacific, after the series of nice short trades, the trend went to up, slight uptrend here, not much of a move, and it was kind of almost like a head fake here at the beginning. But notice what happened. This institutional algorithm is still in effect, even though it's not shading. It's still here. You can see that by the dashed lines. So you had a nice entry here on the long side. Again, I normally don't like to take other entries if they're higher and I'm still in a managing long, which this was, trying to get a runner, and eventually that runner was taken out. As we moved further, there was an additional trade here that got stopped out. And again, for that reason, this is your next trade entry here, a long trade for a scalp. The runner then eventually got taken out. And when that happens, one modification is then I look to see what the higher area is as far as taking a trade, this area of resistance, and I'm basically waiting. I like to wait to see that taken out. Then we had a next lower here and here. It needs to be taken out on a closed basis, so no entries in here. Of course, you'd still be managing until right here. So that means no entry here or here. And then the real beauty of this is as the market pulled down right into the phantom area, it signaled another institutional algorithm with the long trade here, and this trade went coast to coast, went straight up coast to coast, moving from right around the 1068 level all the way up to around the 1073 level. That was 50 ticks, or about $500 on a contract if you're able to hold it. So that's the Russell, and again, you can see that this is a very good approach to trading. You don't get every trade, and of course every trade's not a winner, but you have a very, very high percentage of winning trades, and the reward to risk is extremely high. Let's take a look at one more market. This is Nasdaq. A lot of you traders like to trade the Nasdaq. So again, everything is basically going to be the same. We're looking for the institutional algorithms trading in the direction of the overall trend. Here's our pit open right here. We had an institutional algorithm kicking in right at the pit open as the institutions got busy off the bat. Our trend is down, and you can see we had basically 3 really great entries in here that just caused this market, didn't cause the market, but you were able to take this market down a considerable distance here for a very nice profit. And additionally, as we continued on further, we had an additional series of trades on this market with another algorithm, institutional algorithm band that was formed here right around 6:45, 6:46 this morning. And again, here's your short entries, and again, very nice profits. So a lot of traders, I was talking to them that were trading the Nasdaq today using this methodology. They were all done basically in the first half hour of trading, had met all their goals in that first half hour. And that's really what trading is all about. Remember, trading is not a marathon. You want to get your profits, get out, and be done for the day, and enjoy the rest of the day. Now, just to show how good this is, and I'm not going to go through all the trades here again, you'll see it as I scroll through, but we were talking about the short trades meeting goals. Most traders were done, and then now let's see what happens. As the market rallied up, okay, we got a trend change up in here. You can see where the mid-band went from red to green. We did have an algorithm band that formed in here as well, and you triggered a nice initial trade for a scalp, but no runner, okay? But then we came back through it again with a very nice long trade. And you can see that the institutions were supporting this market through here, allowing multiple entries. I'm not going to belabor all of these entries in here, but you can see everything to the upside in here, holding these levels, and then the market took off, made a new interim high, not a session high, but an interim high here, all good entries. Market pulled back basically into this band 5, another algorithm kicked in, institutional algorithm. We went up very nicely from here. We basically had an hour of trading that's gone by, and it's pretty much nailed every trade. Another one here around the 735 level. Again, another nice entry, moving higher. And then, as often happens, the trend changed to down here. No more long trades. After you've exhausted all the long trades, it actually went in, recognized what the institutions were doing, and got short and rode this huge roller coaster move to the downside. It really doesn't get any better than that as far as picking trades. You can see that it traded both sides. It had no bias. It's waiting for what the institutions are doing and then using that in conjunction with the trend. So again, we looked at 3 markets, all of them extremely profitable. Remember, trading is all about patience, discipline, and timing. You need to have the patience to wait for the proper setups, in this case using these filters or any filters that are available to you in your trading. In this case, it's institutional algorithms combined with the trend and an automatic indicator that will take the trades if you want it to. You need to have the discipline of sitting and waiting and only sticking to your trade setups, and then the timing to execute the trades. So thanks for watching. I hope this was very beneficial to you and hope to see some of you soon. So thanks again for watching, everyone. Have a great day, and please don't overtrade. Bye-bye.